this is happening. It is happening, guys. It is happening. And I think this is exactly what we've been looking for. If you are the type of person that has been on the fence, wondering when is the time to get into the market, you've been waiting on the sideline thinking, well, it is too expensive at this point, let me wait. Well, this is your opportunity. This is it. Because at the end of the day, I want to tell you something, right? You cannot see this type of opportunity and let it go past you. Now, I'm not saying that you should go all in, okay? I'm not saying that you should go all in. But what I'm saying is that you need to take advantage of the discounts that is pretty much everywhere in the stock market. No matter the company you're looking into right now, they are all down. Nvidia, Apple is not too bad, to be honest with you. But things like Tesla, which I know why, I'm not going to get into that. Tesla is down a lot. Amazon is down a lot. All right, and these are great companies for most part when you exclude the the political environment we're in right now. And I want to tell you that if you can take advantage of this type of market, you are going to do well long term. It is looking red. Don't even look at your portfolio. If you look at it, you'll be scared of investing. You would think, oh, I'm losing money. Yes, you're losing money on paper though, as long as you don't sell. You have to look at it that way. You have to force yourself to look at it that way. There's no way you would look at this and walk away and not take advantage of it. Now, if you don't want your emotions to be in the way, set it and forget it. What does that mean? Set it an automatic investment, all right? Every single day, let it buy, I don't know, however worth of money you have. Maybe it's $100 every day, whether it's $20 every day. Let it just buy it for the next couple of weeks. Set it, let your emotions be out of the way and forget it. Don't even be looking at a portfolio if that is the type of person you are. If you think you're going to be worried about, the day-to-day market fluctuations, then you are in it for a long ride. You're in this for a long ride because you just don't know how the day is going to play out. It's going to start out somewhat okay and then everything falls apart throughout the day. And here's something I'm going to tell you. All it's going to take is a post on X or Truth Social and the stock market is going to be green again. Now, the reality is that investors are not happy with these all exemptions on specific, industries, auto industry or the agriculture industry and the likes. The exemptions are not permanent solutions because they are only pushed out for another weeks, 3 weeks, 4 weeks out, a month out. And then what happens next? We go back into the cycle of, we're back into this trade war again. So this is why I'm not going to ask you to put all your money into it. This is why I'm not going to ask you to, go all in. The right mentality and right approach to this is buy on a consistent basis, but if possible, increase the percentage that you buy. So if normally you used to buy, let's say every 2 weeks, all right, and you're doing maybe $100 every 2 weeks or $20 every 2 weeks. I don't know what your portfolio looks like, right? Now this is the time you want to maybe put it up to like $300, maybe $400, maybe $500, depending on what you can afford. Because when you do that, you're able to buy more of these shares, and preferably if you can do those ETFs, like you have the VOO, you have the VTI, you have the SPY, you have the VYM, I believe. You have a lot of those ETFs out there that you can put your money in and you won't go wrong. But what we want to do is to make sure that we are buying more. So if you were buying $100 worth before, maybe now you want to do $200 so that you're doubling what you're putting into it, but at the same time you're even buying way more shares than you used to buy. Because if you're just doing $100 and now you're doing $100 now, you're going to buy more, of course, just because the prices are cheaper. Price of the shares are cheaper. But the fact that you are putting more money into it means that you are able to almost catch up and reduce your average of the prices you've purchased over time. I mean, depending on how long you've been investing. By bringing that average, by putting more money into it now, the chances are you will be able to get out of this much sooner than when you don't invest at all during this time, or you are investing, a little bit of money because you're scared. And something I always say is, as long as you have your insurance fund. What is insurance fund? All right. Insurance fund to me is money that you have saved for your emergencies. For something that, you have an emergency, you have some money that is readily available to you. That is the insurance fund right there. Because if something were to go wrong, you have some money to be able to take care of your basic needs. As long as you have those on the side and you are consistently doing your job, if you're working, put your head down, because this is the time to really put your head down. With the way things are going, we don't know where things are going. Honestly, we don't know where things are going, and things may get really bad. But what is important now is that we want to take advantage of buying low. The principle is buy low, sell high. If you exit the market now, if you sell and get out, you've locked in your losses, and that is it. You've locked in your losses, and that will be it for a long time. Because for you to recoup those losses would mean that you will be buying higher, and you can't even recoup the losses because you're out of the market. But for those portfolios that are negative and looking red right now, if you can just continue to make your purchases, don't get too greedy. Don't get too focused on, oh, I think it's at the lowest point now, because now you're trying to time it. All right. And again, like I said, if you want to take your emotions out of this, set it and forget it. For example, if you want to buy, let's say, NVIDIA shares, you think it's going to get to 108, go ahead and put 108 in there as a limit order. Let it execute when it reaches 108. That way you're not playing this game with the stock market, trying to figure out where the low is, where the high is, where you think you should get in. That is just waste of time, especially if you have, unless you have the time, all right, to sit down with the computer all day long. Because the market has been very erratic, and it's going to continue that way for some time until a post is made on the social media, and guess what? Everybody's all happy and everything goes, crazy again. So my advice to you is, don't waste your time. Don't let your emotions get in the way. Set it and forget it, and do it for the long term. It is as simple as that. Do it for the long term. Don't worry about chasing these headlines. Don't worry about chasing the bottom. That is not the goal. The goal is not to catch the bottom. The goal is to buy it when it's at a discount. Now, it could be 5% discount. It could be 10% discount. It could be 20% discount. Preferably, we want to get it as low as possible. But the reality is that we don't know where the low is. With the way things are going, the market could reach a 10%, it's reaching the correction territory, which is anything at 10%, and it could reach a crash territory when it's close to 20%. If the market falls to that point, what are you going to do? Well, if your portfolio drops 50%, what are you going to do? Are you going to exit and think and say you're not going to invest again? Well, because that is something that you don't want to do. Like my video from yesterday, this is a lifetime opportunity. Don't waste it, seize it, and let it work for you. As long as you've taken care of the important things, like I say, the important things are taken care of, you will just be fine. This is always the pattern. It has happened so many times. COVID, it happened. 2008, it happened. 2001, it happened. 2000, it happened. All right? And it will continue to happen. And now we are in and this is not even close to those ones, by the way, just so you know, just give you a good reference point. This is not even close to losing 10, 20% of the COVID period or the 2008 period. So let's be rational in this. Don't get scared about this. This is making me so happy because I want it to even come lower. Let it come lower. The lower it gets, the better we can reach it, right? Think about it this way. The lower it gets, the more you can fill into your basket. The lower it gets, the more you can fill into your basket because everything is coming down. You have all these options, right? These ETFs and stocks from different companies, great companies, by the way, that are making a lot of money, beating expectations. Okay, and what we have right now is just, of course, the fear of uncertainty. Everybody's jumping out of the market. Don't jump out. What you want to do is to pick those great companies, add more to your basket, add more to the basket, as much as you can. There was something I was going to share, and maybe this is for another video because I'm still thinking about this, okay? Because if we get to a point where the market falls even further, would you consider raising money from a family member, borrowing money to even put more into the market, assuming you don't have any extra money to put into the market. Because if you get a hold of money that you don't have to pay back for the next 5 years, maybe it's $10,000, maybe it's $20,000, and you can hold that money for the next 5 years without paying it back until it's due, putting that money in the stock market at a low at this point is almost a guarantee. Almost. Remember, nothing is perfect, nothing is guaranteed, nothing is 100%, right? But it's almost a guarantee that within the next few months, we're going to be out of this rut. And all you have to do is you've invested that money, and then you pretty much take your profits, pay back the debt you hold. Now, I generally don't encourage that because that's leverage, and you have to be very careful, very strategic, and know what you're doing when you're taking leverage. And that's why I don't talk about this, because for most people that are on this channel, I would say, most people follow this because I hope that, you share the same sentiments as me when it comes to investing. You avoid risk as much as you can, especially when it comes to leveraging, all right? That is not what I would encourage you to do. But at the same time, at the same token, if you know what you're doing in the world of investing, this is presenting a moment of opportunity that you may likely think about something like that. But again, you're not going to a bank because interest rate is ridiculous right now. And you're not doing a payday loan to do something like this. This is not that type of advice at all. I'm talking about money that you have access to. Maybe somebody is borrowing you, maybe someone is lending you that money, maybe someone is giving you that money. And you don't have to pay a huge penalty to return it in terms of interest. Anyway, I was thinking about this idea. I thought I was going to share this at some point, but I feel like we haven't reached that territory yet. I feel like it needs to come lower. Let it come down. Let it come down. When it gets lower, that's the point when it reaches that 20% territory, all right, 15%, because now we're approaching 10% correction territory. We've lost the S&P 500 is negative for the year 2025 right now. We're already hitting up everything we gained since the result of the election, right? We've lost all that already. Well, we need to even come lower before we even start talking about things like that. Anyway, thought to share my thoughts. All right, wanted to share my thoughts with you. Hope you find value in this one. I'll see you in the next one.